just interject for a minute there. One of the things that conventional banks have always sort of claimed is, the thing that they say they're so good at is efficiency.
Yeah.
And efficiency for them means putting all of the funds to work.
Yeah.
And so they would look at 17.5%. That's not safety, that's idleness, right? So how would you...
You mean
they would say that this is inefficient because you're not putting those funds to work. They're just lying there. 10%, that's what Basel III calls for.
Yeah.
And this difference of 7.5% is a loss of efficiency on the part of Islamic banks.
Well, it can be looked from that perspective of efficiency. But somehow Islamic bankers would see that as the highest level of efficiency because they manage to keep above average. So it's like a buffer. And that has some positive, would send positive signals to investors that these banks are highly capitalized. To me, so if I'm an investor and I know that the capital adequacy of this bank is so good, I am already comfortable to invest with this bank. So from that perspective, it's a positive.
Lehman Brothers was
highly
by the criteria of efficiency, highly efficient, but it collapsed. It was so efficient it collapsed.
Maybe the nature of assets. So in conventional, it's a loan with interest, with floating rate. That is, and also with poor governance in the 2008 crisis, that has led to the collapse. We perceive that Islamic banks, since they are dealing with real assets, since they are highly capitalized, since they are heavily regulated in Malaysia, the possibility for them to face the same fate as some banks faced in the West may not be true. And not only that, of course, when we compare Western banks with Islamic, we are comparing an Islamic industry that is only about 2% of the entire banking system, financial system. It's a very small, it's a point in the ocean. Since they are not investing much and they are not, so it's like the comparison may not be objective. So it's 2% compared with 89%. Definitely a small bank is not exposed to the same risks as big banks. That's why I was fascinated. I did some research on the insulation of Islamic banks vis-a-vis the 2008 financial crisis, and with all the praises to the Islamic banking system, which is true. But one fact was that it is quite logical that if you are not exposed to the risk, if you're not investing, for example, derivatives, Islamic finance does not allow derivatives. So of course you are not exposed to this risk. So you will not lose anything. Compared with other banks, once they invest in derivatives, they are already exposed, and any losses they will suffer in big amounts. So you are true. On the one hand, we have this. I don't claim that Islamic banks in Malaysia they are efficient in terms of good investment or investing their excess of liquidity, whether it is well done. But the figures given by the central bank shows that the overall figure in the 2019 stability report have given good indication, positive indication that Islamic finance is stable, highly capitalized, safe, and even when we want to measure stability, we will not only look into the institutions, we have to look also into the customers. So the banks are dealing with customers, and they have found that the asset to debt ratio, because banks have to deal with customers who have both assets and debt. So they found that these customers have more assets than debt, financial assets and non-financial assets, which means this customer has, actually they calculated, they found 4.1%, which means they have 4 times assets than debt. And when someone is like this, you can deal with him. You can offer him a financing. According to the Central Bank of Malaysia, that is good enough. So we have good type of customers. We have highly capitalized market institutions. In the same time, something called the quality of asset, which means we have low impairment of loans, that is in conventional, and low impairment of financing in Islamic, which means the ratio of delinquency is low. It's about 5.1% from the total borrowers in financing, as well as in Islamic. Only 5.1 will default in their payments. The vast majority will not default. This will give us a picture of the asset quality. The asset is good. There's low impairment, low delinquency ratio. So these 3 levels, the institutions are highly capitalized. Customers, they have more assets than loans. And also, we have low impairment ratios. These 3 major indicators would give us a picture that Islamic finance in Malaysia is stable, and it will continue to be stable. That's why I'm not sure whether it will continue to be stable, but if it goes like this, we have to link it to the economic also situation. That has to be researched empirically. To what extent the macroeconomic factors can affect the banking sector. So, for example, the public debt. We know that Malaysia has about 1-something trillion ringgit debt, internal and external, which is huge. It's about 257 billion USD. It's a huge amount. To what extent the servicing of this debt can affect the banking sector it requires an empirical study to do that.
We're starting to run out of time here. So then, if you had to sum up how well the Malaysian regulators are doing, I think, with regard to achieving the maqasid.
Exactly. I mean, one good thing is, has the Malaysian regulators succeeded in achieving maqasid in Islamic finance? To what extent they have succeeded to do that? In our paper, we have cited positive results such as this, but in the same time, we have also mentioned the obstacles and the challenges. One of the obstacles towards the realization of maqasid is the leveraging, that Islamic finance is leveraging a lot on conventional finance in terms of structuring of products, IT system, which means we have a high deal of replication and lack of, I don't like to say lack, but low level of innovation. That, to me, threatens the realization of maqasid, because it is not simply replicating the conventional product. It is actually exporting the same problems of the conventional to Islamic. So this is an issue. Another issue that is obstructing the realization of maqasid is the issue of harmonization between Sharia and law. So many of the Islamic financial products, they are not 100% independent actually. So they have to be subject to the land of the law. So, for example, ijara must be applied within the High Purchase Act 1956 in Malaysia. So we don't have an Islamic ijara act. We have High Purchase Act. So this has had some repercussions which we have explained in the paper. So leveraging the harmonization and also the tendency to replicate conventional products. That is a big tendency actually, which in our paper we said that this is in the Middle East is called hiyal. It may not be done with the intention of hila actually, which is legal stratagem or a trick, but ultimately product developers may find themselves simply replicating. So replication is against maqasid. We need to replicate, we need to be innovative in order to really realize the maqasid sharia. So these three obstacles may hinder the realization of maqasid sharia in Malaysia.
Okay, thank you so much.
Barakallahu feek. Jazakumullahu khairan.
So that's the end of this episode. We ask our viewers to stay tuned for other episodes that we will upload soon, inshallah. Assalamu alaikum wa rahmatullahi.